Welcome to Everything Money. In this video, we will talk about Tesla and the stock explosion yesterday. We will use our Everything Money software to show you the financials and how to separate the financials of a company from a stock price. We will head over to Trader Mo. He will show us if people are trading Tesla. I'm sure they were. Mo, I was ready to get on Tesla myself. Paul and Mo will walk you through their thought process and mindset of investing in a huge company like Tesla and how to react to a stock explosion that happened yesterday. I introduce you to Paul, but first, who are we? The show is I bring your normal person questions, and I will do that in this episode. I will be challenging these two wealthy guys that manage over $100 million in businesses, real estate, and stocks. I will be bringing your questions to them. And Paul, I'm going to be challenging you on this one because, as you know, I was a firm believer in Tesla. I owned a lot of stock, and it was chapping my ass yesterday. I called Mo very, very upset.
I had to talk him off a ledge.
Very upset.
Well, I'm just glad he didn't call me.
So I introduced you to Paul Gabriel.
Guys, before we go further, please follow us on Instagram. We have a new Instagram account. Follow all of us. It helps us out a lot. Okay, so let's go to our exclusive Everything Money software.
Please do.
We're going to look at Tesla.
Oh, Lord.
I know that you're super stoked about this. So we go to Tesla, click on it. I don't know if we have the updated numbers yet downloaded the system because we have to wait for Morningstar to update us. It is updated. Oh boy.
Okay, so here's the gist, folks. We are known as Tesla bears. I kind of look like a bear. I'm very hairy. And so, Paul, when anything happens to Tesla, Mo, on a good day, all of our videos get bombarded with how stupid we are, what clowns we are. For example, Paul, you tell people to buy Intel and it drops 10%, and you tell people to avoid Tesla and Bitcoin and it's completely exploding. So how long can we look like clowns to the rest of the world, and how would you defend that statement?
There's no defense, guys. All there is to say, let's just imagine a world. Everybody who's is it possible in the world of anything?
Yes.
That every person in the world is really, really good at investing? Is it possible?
Currently it is.
Okay, currently it is.
Yes.
Go back in history and look at all the times in which average people appear to be experts. That usually happens in the world of investing. Fast forward a few years,
yes.
What ends up happening?
Crash, correction, fall.
People get wiped out. There's the Peter Lynch cocktail party story.
And boy, oh boy, go on, Paul. I know where you're headed.
Here's what he says. If I go to a cocktail party and people are just kind of in between about what I do, the market's probably selling for what it should be. If I go to a cocktail party and people are telling me what I should be buying, the market's overpriced and I need to get out. If I go to a cocktail party and people feel bad for me for what I do for a living, then it's probably the right time to buy. Peter Lynch, one of the best investors of all time. It is not possible that you go out there and your 17-year-old pimply neighbor is an expert in Bitcoin, Tesla, and all these other stocks. If you think that's reasonable, you're absolutely insane. It just doesn't work that way. Now, what we're going to do here is I'm going to show you the numbers for Tesla. We're going to use our software here, and we'll explain everything. We'll show you how you can use the numbers to understand how ridiculously overpriced Tesla is. Because right now, the average person watching this is thinking to themselves, Tesla's a great car, therefore it's a great company, therefore I'll buy it and everything will be great.
That's true.
We have to separate the company from the stock. Jeff Bezos, when they confronted Jeff Bezos years after this, they said, Jeff, your stock went from $113 down to $6 in the tech crash. What did he say, Seth?
He said, well, the financials at the time were still good, and he still obviously believed in his company. I mean,
what he said exactly was, people have to remember that the company and the stock price are very different things. The stock price is merely the public's perception of the value of the company. The company's financials are going to do whatever they're going to do. Okay, so let's start here. Let's just start going through it.
We use our 8-pillar analysis to look at the financials of a company. We will show you, and you will learn what Tesla makes, what they're doing with their shares outstanding, how much debt do they have, and give you a reasonable price target for Tesla as a stock. Go ahead, Paul.
A reasonable price target.
It should be laughable here.
All right, guys, it's $1 trillion company right now. It hit that yesterday. 5-year PE.
Mo, I got Mo's. Paul, the disruption bell. For
disruption
Mo.
Bell?
I brought him a bell for Mo. Go on.
5-year PE doesn't exist. Why? Because in the last 5 years, they've lost money overall. Their 1-year PE is 300.
Yay.
Sick.
We want
everybody
this number
out
around
there,
20. Go ahead, Paul.
I'm going to do a lot of analysis. When people say it's not a car company, it's a tech company, I'm going to compare the numbers and the margins to car companies and tech companies, and you tell me what it is.
Okay.
This profit margin is 7.3%. Return on invested capital, we want over 9%. It's actually negative over the last 5 years. Why? Because it hasn't made money in the last 5 years.
They're growing. They're building gigas all over.
5-year free, that has nothing to do with it.
Oh, okay.
5-year free cash flow, negative 222.3.
I'm glad you called me out, Paul, because that's the argument,
Actually,
right?
you know what? It has something to do with it, but it has nothing to do with my analysis in the stock overall. You're right, they are building gigafactories all over. I get that. It is a very valid argument, but we're going to go beyond that and say, great. So let's say everything's built the way they want to build it.
Okay.
Free cash flow last year, though, $2.6 billion. So guys, right now, the company is selling for $1 trillion, and last year's free cash flow is 2.56. That's 400 times free cash flow.
Oh, boy.
The average in the market, not right now, but over time, is 15. Does that mean this is overpriced? In and of itself, that doesn't mean it's overpriced, right? Just like if you were in a relationship and you saw your spouse get mad because of something bad that happened, you wouldn't sit there and say they're an angry, mean person. No, that's that's one incident. Now, if we go and every single person in the world they talk to, they're a jerk to and they're mean to, okay, they're a mean person. This is one metric. It is almost 30 times larger. Big deal. What's 30 times the money amongst friends? So let's go to pillar number. So far we have 2 X's. We have a negative PE over the last 5 years, and we have a negative ROIC, return on invested capital, over the last 5 years. Okay, income statement. Third pillar is we want to see income growth. So then we go to our exclusive software, we go to the income statement. We look at the last 5 years.
Revenue.
Revenue growth, 1 year too far. 10.76 to 46.85. That's a check mark. 4.5 times more. Awesome job, guys.
How about profit growth for Tesla?
Profit growth. They lost $1.4 billion. They made $3.44. Check mark there. That's pillar number 4.
Pillar number 5 is shares outstanding. We want the share number going down. Hopefully they're buying back shares and not diluting us, Paul.
Well, they're diluting the crap out of you. 836 to $1 billion. Look 10 years ago. 527 to $1 billion. Now, somebody out there who's really, really stupid is going to look at me and say, but they had stock splits. No. This already factors in the stock split, kids. This already factors in that stock split. So what this means, guys, is if you own 10 shares 10 years ago, now they've diluted you. It's like you owning 5 shares from 10 years ago. It's not a stock split, it's actual dilution. They've cut the pie up in more pieces, and your piece of the pie is worth less of the company. Think about that for a second, guys. This company that loves you so much, they don't care about you. They're diluting. You know why? You know what this says to me? This says to me that the company insiders are saying, boy, all these idiots out there love our stock and how expensive it is. Why should we take on debt? If we ever need capital, let's just give them what they want. We're cocaine. We're crack dealers on the street. We're sitting there going, these people have no idea this is killing them. Just give them more. Go right ahead. Do it. More power to you. But either way, another X to our good numbers. Now, the 5th metric is very important. 6th metric is very important. What we do is we take the 5 years of free cash flow, we multiply it by 5. We want their total long-term liabilities to be under that number. Unfortunately here, on the main page of our software, their 5-year free cash flow is negative, so it's automatically an X, because you can't have negative debt, essentially. Well, I'm sure there's a way to have negative debt in a weird way, but so already there's an X there for that one. Okay, so let's go to the cash flow statement.
This is very important. Pillar number 7 is free cash flow growth.
So free cash flow is very important here. Now, one thing I will say, free cash flow is cash from operations less their capital expenditures. In our exclusive software, I added this line right here to make it easy for you. No other software has this line added at this location. They have it in other parts of the software. Here, it's located right here to make it easy for you. I will say, I do like the fact that their operating cash flow is increasing significantly. And their free cash flow has increased significantly, negative 4.88, so that's a check mark. But again, just like the debt number, their average free cash flow the last 5 years is negative, so we usually try to apply a value, a multiple to that free cash flow to come up with an idea of where we want the company to be, but the average of the last 5 years is negative, so that's automatically an X. So guys, to make it simple, we go to our software, we click the 8 Pillars tab, which is available for every stock, and it's pretty rough out there. Now, does this mean that it's overpriced in and of itself? I have bought 8-pillar stocks that are all X's, I bought them. I have ignored 8-pillar stocks that are all green check marks, right? What I want to do here is, one of the big things about Tesla is I want to look at the company and I want to sit there and compare it to other car companies, other tech companies, because I think it's a car company. Mo, why do I think it's a car company?
Probably because the majority of their revenue comes from cars.
What majority of it? Isn't it like 85 or 90%?
87.5%.
Is that what it is?
Yeah. 87,
so
yeah.
guys, 87.5% of the revenue comes from cars. Now you're the genius out there saying, yes, Paul, but the technology in the cars is incredible. It's a tech company.
You don't get the software.
Guess what? I was in my Range Rover this morning, not trying to be a snob, going, wow, look at this software. It's pretty freaking cool.
Yes.
Does that make Land Rover a tech company? Well, just because Tesla. So let's look at this. We're going to go to their profit margin. This gross profit margin right here is 23%. Gross margin means, what do they make on every extra dollar they sell? Profit margin here is 7.3. This means after all expenses, all taxes, how much they make? 7.3%. Okay, let's pull up another car company just for fun. We'll pull up our software again. Let's pull up our friends at Toyota, the biggest car company in the world by market cap apart from Tesla. Gross margin 19.4, profit margin 9.8.
So car company and still better
Okay.
profit margin.
Now let's go to a tech company. Let's go to Microsoft.
Yeah, this is good.
Gross margin 69%, profit margin 36.
Ain't nobody got time
So
for that.
5 times larger profit margin, 3 times larger gross margin. Maybe that's a fluke. Let's go to another software business.
Google, Apple?
Let's go to Google.
Yeah.
55.7, 28.6. Let's go to Apple. 41%, 25%. They do a lot of hardware. Okay, maybe we just picked the wrong car company. Let's go to Ford. 14.6, 2.5. Let's go to Honda.
Workout tapes like Fonda.
21.3 gross margin, no profit. Guys, which one does it look like? Walks like a duck, talks like a duck, looks like a duck. What is it?
But I wanted to believe it's an eagle.
We all want to believe it's an eagle. We all want to believe that.
And I think 10 years from now, with the battery and the robo-taxis, it could be a bald eagle, Paul.
Now, let's look at it this way.
Go on.
Look at Honda. One of the most common things we do when comparing companies is to look at metrics within the companies that compare. So, price to sales ratio, you take the market cap of the company and divide it by the revenue of the company. This is the car business. This is Honda, 0.4.
Yeah, that's tough, huh?
Let's go to Toyota. 0.9.
Right.
Let's go to Ford. 0.46. Let's go to Tesla. 22. But you know what? You're right. It's probably a tech company. Let's go find a tech company.
Yeah. Do those ones no one's ever heard of.
Microsoft.
Yeah, this one's not big.
14.
Uh-oh.
Google.
Ain't nobody got time for that.
8.4.
Oh, boy.
But Apple's going to be different. Come on. Apple's going to be way different. 7.2. Guys, it's even overpriced as a tech company. So it doesn't have the margin of a tech company, and it's selling for triple or double what the other tech companies are doing. But you're right. It's probably reasonable. So let's say the average for a car company, on average, is 0.6 times revenue as their market cap. So what this means is, let's take their market cap of $1.020 billion divided by 0.6. What is that? $1.7 trillion. It needs revenue of $1.7 trillion to justify its current market cap if you believe it's a car company, okay? 1.7 trillion. It did 46 billion last year. It needs to grow by almost 40 times to justify its current market cap. Okay, Paul, you're stupid.
Yes.
It's a tech company.
Okay.
The average is 10. So we need revenue of 102 billion. It's currently at 46 billion. Okay, much more reasonable. It only needs to double. But guess what? It didn't have the profit margin of a tech company. It didn't have 25% bottom line margin. It doesn't even make 25% on its every car it sells. So after paying for all its overhead, all its employees, all its factories, all these gigafactories, it needs to make 25% to justify that. Guys, I'm sorry. If you don't see what I'm saying here, then turn off the channel. I'm not for you, and I'm okay with that.
Yes.
But if this is starting to make sense to you, you go, wait a second. hang on a second. Yeah, that doesn't make any sense. If you believe that this is the right, that Tesla's still okay, email me at paul@everythingmoney.com and offer to buy my company. I would love for you to buy shares in my company. My company has way more growth potential than Tesla. I will sell you at an astronomical valuation.
Yes.
Equivalent to Tesla's valuation all day long. I will value my company at $1 billion. And it's not worth $1 billion. If I'll value it at $1 billion, I will sell you shares all day long because at the table, if you don't know who the sucker is, you're the sucker. Mo, what do you think? Am I just being crazy?
No, this is very reasonable. This is just common sense. It's math.
It's just math.
I mean, you want to factor in they could do this, they could do this, they could do this. Have fun.
Listen,
They could also not do any of those things.
they have to get to $1.7 trillion in revenue as a car company to justify its current valuation. $1.7 trillion. The largest car company does how much per year in revenue? Toyota does what? GM does $400 billion a year. It's got to be 4 times larger than Toyota and GM
To justify today's
to
price.
justify today's value. It is 1/10 the size in terms of revenue.
So my job is, I feel like I need to challenge you in that.
Challenge away, my friend.
I asked Mo, I said, at what point, as a normal person might think, at what point does all of this mumbo jumbo that you're saying not matter and the stock
When
price
you're broke.
will still go up?
Listen,
They'll
eventually,
sell the Ys, they'll make the batteries, they'll put solar in cars. Is it possible
it is possible.
that this stock just continues to go through the roof? It's a $10,000, $30,000 stock in 10 years.
So here's what you forget. As it grows larger and larger, it cannot justify a higher and higher valuation. So eventually, the chickens come home to roost. Is that what it is?
Yes.
Eventually, the chickens come home to roost. Eventually, at some point, it can't just go up forever.
It can't.
At some point, there's got to be a come to Jesus moment where you're like, wait a second. Hypothetically, if it sold every single car out there imaginable, there's a cap to it. If every single car company in the world went bankrupt and Tesla was the only manufacturer of cars, what's that value? I don't know what the value is.
Yeah.
Add up all the car company values, and that's probably the value right there of what it would be. At some point, it's got to stop. It's just like the Bitcoin. Somebody said Bitcoin's going to grow 19% a year forever. And I said, okay, 50 years from now, it's literally the largest. It is larger than the entire world economy.
I see.
that possible?
At some point, it has to stop.
It has to stop at some point.
And at some point, I mean, Tesla's been around. How long have they been doing this? Almost a decade?
No.
Making these sexy cars?
Oh,
yeah.
way
more
but
than
they've been
2000
around since 2003. They were started.
But I mean for real. Like 2013, they came out with their first
yes.
Model S.
You're right, Mo.
So they're making awesome cars, but at some point they're not going to be the bee's knees anymore, and people are going to go, "Oh, look at this company." I mean, I watched a video on the Rivian yesterday. It's an awesome car.
So in the meantime,
but at some point it's gonna fizzle out, and they won't be the best thing of all time.
So in the meantime, there are millions of dollars being made on Tesla. And if you want to buy this and trade this at a quicker pace, we focus on long-term, long-hold, 7-year analysis on companies. But if you want to trade this, Mo, what happened yesterday? Because I was ready to trade this at 9:30. But in reality, Paul, my trading chops, I haven't practiced enough. I was there, I was ready. And of course, by 3 o'clock, I was getting texts, Mo, as probably you were, by people who have never invested at all, asking me about my thoughts on getting into Tesla. So this is a real thing about, the cocktail party story, Paul, is people literally who don't even have an account, have no idea what a Roth IRA is, was texting me at 3 o'clock in the afternoon saying, should I be getting into Tesla? So Mo, what the hell happened yesterday?
Yeah, but also let's talk about why it went up. It was because of this Hertz order, Paul. While I'm doing
the Hertz order.
Paul, while I'm doing this, go to Y charts and pull up Hertz and go look at the cash on hand, their profit, share dilution, and pull it up right after this.
Well, why can't we do it on our software?
I don't think it's on. I tried it this morning, but try it. So with Tesla yesterday, this is Seth wanted me to do this, and it's a perfect example. This is a 15-minute chart. You could have gone in and made a lot of money on this yesterday by just following this stochastic and following these engulfing candlesticks, and all you had to do was pay attention to this stochastic, and you could have made, well, basically, you could have got in right here and exited, let's call it here, Seth, 1320 or 1020, and you would have entered at $1,020 a share. That's pretty decent for, but this is all you would do is follow these basic rules. Enter on an engulfing candlestick when your stochastic's over 80%, inclining volume, and then as soon as this stochastic drops below 80%, you exit, you take your money and run. This is the problem I have with Tesla right now. This is a long-term chart, and what we are having right now is your quintessential flagpole pattern that comes straight down. And if we look back, the last time Tesla did a flagpole, it went straight up and it came all the way back down here. And if let's just erase this, you lost half your value from that thing. So right now, I'm looking at this thing. I wouldn't be surprised if it came back down to $900 a share. So if you made money on this, I know you're not that smart because you're invested in this, but be a little bit smart and take some profits off the table.
Mo, it's up another 5% this morning.
Okay, even better. Take even more profits off the table because you're going to get burned. This is going to come back down. I promise you this is going to come back down here.
Yeah, parabolic rises like that one don't stay forever.
Exactly.
They don't plateau. Then investments don't do this.
Nope.
They just don't do that.
Can you show me the daily chart right now? Because
Sure.
it's currently blasting off again.
Yeah, it is, but same situation. So you're getting, and look at, I mean, you're getting the volume, that's for sure, but it's coming up here. It's doing this flagpole pattern again. Eventually, this is going to sputter out and fall right back down. Remember, this gap has to fill that it created yesterday. It's going to fill around this low 900 number.
So guys, remember one thing. When we talk here, we're not sitting there saying Tesla shouldn't be traded. You know, we talked to a great momentum trader who we're going to have an interview with very soon. He even said, he's like, man, I made a ton of money on Tesla. He didn't care about fundamentals. And I love that. He just cared about the momentum of Tesla. Yep. I love that. What I get concerned about is when people confuse and mix the two. Fundamentals with, no, guys, you're either, if you look at Tesla and say fundamentals are great, then you don't understand investing. I'm okay with that.
Yeah.
If you look at the charts or the momentum and understand that, I love it. Ignore the company. I don't care about the company, but focus on the area that matters. Look at Hertz. This is the cash flow statement from Hertz. Remember, cash from operations less their capital expenditures.
This is the
they
company
have no free cash flow.
This is the company that's going to go and spend $4.2 billion
buying
on
these
their
cars.
Last year, they lost $4.7 billion in free cash flow. The year before that, $11 billion in free cash flow. Negative. Lost.
They want to get
Lost
this deal
$10
done
billion.
by next year. They're going to spend this money and buy the
Talk is
100,000
cheap,
cars.
baby.
By the way, maybe it'll happen.
Maybe it will, but talk is cheap.
But guys, at some point, think about it like a business. Just think about it like your personal life. Your individual life is operated like a business. You have cash in, you have cash out, right? If you have less cash coming in than going out, you have to take on debt, or actually, that's pretty much it. You have to take on debt. But a company can issue shares. That is what Tesla is going to do. They're just going to issue shares to all the crackheads out there who want their shares. And they're going to say, thanks for the free money. We're not going to pay any interest on this. So, one of the best parts of our software, Seth.
Yes.
We haven't talked about our software enough. This software is incredible. It helps everyone do all the 8 pillars. Everything you've seen us do has been on our software. The best part of it is the stock analyzer tool. And our community of over 6,000 people talking about our software, talking about investments all day long. It is only 90 cents per day. Go to everythingmoney.com, or if you want, go to Patreon. But everythingmoney.com, we don't charge you sales tax yet, and you don't get double charged in the first month like you do on Patreon. But whatever you feel comfortable with, go do it. It's only 90 cents a day. You get everything you've seen here, plus news. This is gonna be your one-stop shop for all investing, and you're locked into the price you get. If you are serious about your finances, for 90 cents a day, you get all of this. And one of the best parts of it is a stock analyzer tool, which I'm gonna do right here. I'm going to look at Tesla and put in an analysis. Let's go 7 years down the road. I'm gonna go low, I can select 1, 2, or 3 options. I'm gonna select 3 here. So, revenue growth. I'm gonna do a low revenue growth of 25, 35, and 45%. So low, middle, high, because it's not gonna grow. I mean, at 45%, by the way, let's just show you what that 45% a year number for 10 years is. Times 46.5 billion. It would be 1.9 trillion in revenue. It is clearly an unreasonable number.
Okay.
The highest revenue company in the world right now is like $550 billion. It would be almost 4 times larger than the largest company in the world today. Is it possible? Sure. But what do all the car companies in the world do in revenue total right now?
That's a good question. I don't know.
I don't know,
That's a
but it's
good
probably,
question.
I would guess it's probably not even $2 trillion.
It's probably not even $2 trillion.
Okay. Well, let's do 1.9. Yeah, okay. So that's the first thing. Share change. They're issuing shares like crazy. I'm gonna go 7, 6, and 5%. Profit margin. I'm gonna go
This would go up, I would think.
5, 7, and 9. Okay? 9 would make it higher than Toyota. Would make it about the same level as Toyota.
Okay.
Okay, you know what? Let me go higher than that. Let's go 6, 8, and 11, just to be crazy. Cash flow margin. I'll do the same thing.
Okay.
PE. Now, this is where everybody's going to argue with me. Guys, there was a guy who ran for governor who has a YouTube channel who says that 70 PE on Tesla when it's the largest company in the world is reasonable.
Yes.
He is speaking out of both ends of his mouth. He assigns a high PE today because Tesla has great growth potential. But 10 years from now, when it's the largest company in the world by far, he assigns a high PE. Just because it's lower doesn't mean it's still not low. The average PE historically is 15. So let's go 20, 30, and 40 times. Same with free cash flow. And let's say 12.5% returns, because you want to at least make some money off of it.
This gives
You're
me,
gonna hit the analyze
this
button.
gives me knots because I know what's going to...
Guys, it's not even worth the price today at these. At the 45% revenue growth with 11% profit margin, selling for a 40 times PE and 40 times free cash flow, it's still not even worth today's price.
What's that top side?
$991. The middle price is $324, a 70% drop from today. Please, Lord Jesus, my Savior, who I love.
Yes.
Please speak to these people and let them realize it's just math, guys. It's just math.
This time's different, Paul.
Yeah, exactly. Every investment is the present value of all future cash flow. The present value of all future cash flow here means you're going to lose a lot of money. The low end, guys, this low end isn't even unreasonable. 25% revenue growth in the next 10 years.
Give it to me now.
Give it to me now. Still makes it a $430 billion revenue business.
10 years from now?
10 years from now. On the low, I had the low number still making it almost the largest car company in the world. Guys, I just don't see how this works out. And if you think I'm wrong, I don't know what to tell you. I just don't know what to tell you. Now, okay, share change. Let's say they all of a sudden miraculously decided to stop issuing shares.
Yes, they'll do that.
Okay.
Boom.
Okay, we finally got a number. So the car company has to do a 1.9 trillion in revenue to get to make it worthwhile today. You're gonna put all this money in so that it becomes the largest company in the world. Forget about car company in the world by 4 times, and you're still only getting a slight discount to the price today. And that's assuming 0 shares increase in the next 10 years. Guys, let me explain something to you. The big shots at Tesla know for a fact that you guys are all addicted to crack. And they're going to issue shares until the market says to them, we're done here.
And you know what else they're going to do?
What?
They're definitely going to cause a stock split because they're going to make it look cheap for you.
Oh, they're looking forward to it.
100% they're going to do a stock split, probably 7-1 or more, come sometime soon.
So anyways, guys, I've said my piece. Join our software because, like I said, this software, you just saw what I did here. This is incredible, and this is all included in the software. You put your own assumptions in it, they'll tell you what you need to pay for the stock today to get your returns that you want.
And Paul, I say again, which I challenged Mo, is with all of these numbers and mumbo jumbo, it still could just keep going up and up and up and up and up, right?
Eventually, there's a come to Jesus moment. Eventually. Guys, go look at history. So unless you believe it's different this time, then just at some point, there's a bad... Look at Intel. Intel, Cisco, Microsoft, all these companies... Intel and Cisco have tripled and quadrupled their revenue and profit in the last 20 years, and their stock is lower than it was 20 years ago.
You guys hear us talk about Intel and Cisco now, and you're like, that's a boring old company.
20 years ago, it wasn't. 20 years ago, it was...
That was the best thing since sliced bread.
Yep.
It's
the
changing
future of the world.
Yep.
That is our take on Tesla. In the end, regardless of large orders by Hertz or other companies, and it can't change what has been a tried and true proven investment strategy by the best investors in the world. And so when all the other YouTubers are telling you this is wonderful, we'll be here talking about the boring stocks like Intel. And yeah, that's our take. Good luck out there buying Tesla. Maybe it goes up, maybe it doesn't. But wow, Paul, what a company. And we all have Teslas, actually.
Yeah.
So
well, we don't all have Teslas.
Yours is
you
on
have
order.
one. I have one in order. Mo has one in order, but I don't know if I'm going to take mine. So if anybody wants to buy the Model X from me at some point in the future, in February or March, let me know. Email me at paul@everythingmoney.com, and I will gladly sell you the contract for a $5,000 fee.
And in a rare coincidence, we are giving away a Tesla to one of our community members.
I love the cars.
Yeah, the cars are incredible.
They're incredible cars.
We'll be giving away a Tesla when we hit 100,000 subscribers, which will be next month. Incredible. So join the software community, and you'll be in the running for a Tesla. That's our take. Fondle the thumbs up. Argue with Paul in the comments. See you next video.